A key term you need to know when you're selling your business is allocation of sale. So I want to explain to you what an allocation of sale is. After you sell your business, the following tax year, you're going to have to report to the IRS that you sold your business. Let's say you sold your business for $2 million. You're going to tell the IRS, I sold my business for $2 million, and this is how it was broken down. You might say, okay, $500,000 of that was contributed to furniture, fixtures, and equipment. Maybe you say that $200,000 of that was inventory that was sold. Maybe $100,000 of that was non-compete. The remaining balance is what your goodwill is. Now, when you break that down to the IRS, it's really important because that is how you're going to be taxed. You're going to be taxed according to how that allocation took place. Now, the buyer is going to have to do the same thing the next tax year. They're going to have to tell the IRS, I bought a business for $2 million, and they're going to have to break down how that allocation took part as well. Now, what you're going to have to do and what the buyer's going to have to do is you guys are going to have to cross-reference each other. And that's why your allocation of sale almost all the time, 99% of the time, that allocation has to be matched up between you and the buyer. They got to be the same how you break that sale down. Now, this comes into the tricky part. The tricky part is what's in the best interest of you on trying to save your taxes is not in the best interest of the buyer. You're trying to save taxes. The buyer is trying to depreciate that acquisition of the business as quickly as they possibly can. So you have a conflict there. I urge you, when you are selling your business, to get with your CPA or tax advisor to help you determine what that allocation should be. Typically, as a seller, most sellers think that the furniture, fixtures, and equipment, they want it to be as high as they possibly can because they think that'll attract buyers. So they make the furniture, fixtures, and equipment as high as it possibly can when they're selling the business, but that's going to hurt you for tax purposes. And I'm not a CPA, I'm not giving you financial advice, you need to talk to your CPA, but typically a seller wants their furniture, fixtures, and equipment to be on the lower end of the scale. Now, obviously, when you're coming up with these numbers, you can't lie. There has to be some sense of reasonability of what the cost of those or what the worth of that furniture, fixture, and equipment is. But this is a subject that I can talk to you about, but at the end of the day, you need to talk to your CPA or you need to talk to your tax advisor, and most importantly, you need to understand what an allocation of sale is.